Hello and welcome. This is Cheryl Major, and I want to welcome you to this edition of the Westford Area Real Estate Podcast. And today I have a very special guest with me. I have Allison McIntyre. And Allie is the manager of our Westford Coldwell Banker office. And I asked her to come in and spend some time with us today because I've had people asking me about the market and what's going on. And I thought that, Allie has her finger on the pulse. That's partly her job. And I thought it would be great for her to come in and share with us. Allie's been doing this for quite a few years. And I thought she could help us understand what to expect this spring. And I think that's kind of what our focus is going to be. I know I was telling Allie before we sat down and started, I was at the dentist this morning. And of course, the hygienist had her hands in my mouth, her fingers in my mouth, so I couldn't have the conversation. But she was asking me, is the market going to get any better? And as soon as she took her hands out of my mouth, I said, it's not a bad market. It's not a bad market. So Allie's going to tell us why it's not a bad market. She's going to tell us what we expect the spring to bring us. Is it going to be same old? Is it going to be different? How will it be different? So, Allie, please share your wisdom, your insights, your stats, whatever you got for us.
Well, thank you first and foremost, Cheryl, for having me on today. I'm honored to be here. And I think you hit the nail on the head. This is not a bad market. In fact, it's honestly, you hear realtors say all the time, it's never a bad market. I mean, let's be real. There are bad markets. We're just coming out of a recession. We came out of a pandemic, which I don't think any of us had ever anticipated we were going to see in our lifetime.
Who knew? Who knew?
And
what's a pandemic?
Right. And I think everybody going into COVID thought the opposite, that real estate was going to take a huge dip, and it did a 180. And from watching how real estate exploded and watching how people could not be cramped up in their houses or small apartments or sharing rooms with people anymore, and they needed more space, I think really blew up the real estate market in its entirety. But at the end of the day, Cheryl, people always need a place to live. They always need a place to live. They need a place to grow. They need a place to downsize from. Births happen and families grow, and there's just so much that happens in a human being's life where they need housing. Yeah. So I think no matter what interest rates are doing, and I think we'll talk about that in just a few minutes, but people need homes, and we don't have enough homes to provide for the amount of demand that's out there.
That's right. We have tons of buyers. We just don't have product. We don't have inventory. Right. And this is nothing new. What's it been? 8 years? 9 years? I mean, every year we say, can't believe it's happening again. Because I remember Black Tuesday, because I've been doing this for a very long time. But I remember having so many houses on the market for so long that 3, 4, 5 months days on market was kind of the way it was, and it's just not been that way for a very long time.
No, it hasn't. And I think that also brings up a lot of valid points, is that we've just come out of an absolutely insane market where we were turning houses faster than the inventory was available, and we still are. I mean, the days on market were 1, 2. Now our days on market are entering a little bit more of what we would consider a normal market, and it's still not anything but normal.
And don't people get all upset if their house isn't sold after the first weekend? Hair on fire.
Yes. And that was never that never should have been a normal thing. Right. So we're still seeing offers at asking price, over asking depending on the market, multiple offers depending on the market. But homes are sitting maybe on average 27, 28 days, which in the grand scheme of things really is not a long time. But buyers are making much more informed
Yes.
and thoughtful decisions right now.
They can sleep on it. They can think about it. Buyer's remorse is always a factor just because it's such a big deal to buy a house. I mean, I remember trying to be so empathetic when I first got in the business. I understand, because I really thought that I was understanding, and then I bought a house and I realized I had no clue what these people were going through.
Right.
So,
and it's one of the biggest purchases you'll make in your lifetime.
Yep.
And so I think when interest rates were in the 2s and the 3s, and essentially it was free money, right? I mean, those kinds of rates are unheard of, and they probably will be gone. Maybe not forever. You never say forever, but they're long gone. So I think at that point, people were just in a feeding frenzy. I'll take what I can get. It really doesn't matter, because at the end of the day, I might not be here for 5 years. I might be here for 2 years or 3 years. Where interest rates, hit at 8% a couple months ago, and now we're back down in the 6s, which is a huge drop. People were getting much more picky about the property that they're going to commit to.
and if there are more days on market, they have the luxury of taking a little more time. The problem with that I see is there just isn't that much to choose from. So if you're thinking too long, you're going to lose out.
Correct.
Yeah.
And I think that's where we're really zeroing in on taking you, for example, a specialized expert in your market is becoming a very important factor for buyers and for sellers in making sure that they're choosing the right individual to represent them. Because where there isn't a lot of inventory on the market, a lot of times people will lean on their realtor to help them find something that really doesn't exist. We're unicorns, right?
Yep.
So, and I think that is a big piece of the puzzle moving forward, finding opportunities for our clientele that may not exist. And a client may say, I want to be in this specific area of Westford, and here's my price range. What can you make happen for me?
Yeah. And then they lose a house that they really want. And my challenge as a realtor for so many years has been when that happens, they compare everything else to what they lost.
Right.
I think it's so important, and I share this with my buyer clients, don't fall in love. Do not fall in love with the house until after you have it.
Right.
Because you really shoot yourself in the foot going forward. It's just, we have buyer fatigue over the past couple of years where people just say, I can't take it emotionally.
It is.
I just have to stop for a while.
No, I think, it's exhausting, right? I mean, people get frustrated, and am I ever going to become a homeowner? And it's definitely a dream of so many people, and a lot of people don't even think they ever could afford to be one, especially where interest rates are right now. But I think the reality is they can. Where there's a will, there's a way, right? And it's our job as real estate agents to educate those that have this dream of home ownership or want to sell their home and capitalize on the equity that's been created even over a very short period of time. And I think, to circle back to your initial question of what's the market look like right now and is it a good time to buy or sell, the answer is always yes, because in the last, 10 we can go further than that, but in the last 10 years, the general consensus within, newscasters and election years, it's always like, is it a good time to buy? Oh, no, it's not a good time. Well, yes, it is, because there have been, I think it was over the last 20 years, three times where the market actually dipped in value, where homeowners' property values dipped. So 3 times in over 20 years, that's pretty good odds.
It's pretty good odds. And this is a very strong area, too, for market value.
Right.
It
And
really
so,
holds its value.
I mean, people are seeing increases in property value on a constant 5 to 6% trajectory. And so if you're doing the math, you bought a house 5 years ago for $500,000, all of a sudden you've just created about $700 or $800, depending on your location, $1,000 worth of equity. That's not a bad profit in 2 or 3 years. Yeah. So is it a good time to buy? Yes. Would you rather buy at a 2% interest rate? I think we all would. But even if you buy at a 6 or a 7 or an 8% interest rate, you're still creating a huge amount of equity for yourself in a couple years.
Right. And I think, too, that people need to let go of the 2 and 3%. I remember finding my dad's mortgage from 1947. From, I think it was Waltham Savings Bank. It was 4.5 or 4.75% in 1947.
Right.
So people let it go. 2%, 3%, bye-bye. That's gone. But if you're at 5, 6, 7, even 8, I mean, my first mortgage in the late 80s was 12%, 13 something percent. So even 8 sounds pretty darn good to me.
It does. It does. And I just think that, especially becoming, or if you are renting right now as well, the rents are astronomical. So for the price that some people are paying for a 1 or a 2 bedroom apartment, especially in this area, I mean, it could be $2,600 a month or $3,200 a month, and you're building no equity. You're building no wealth.
You're paying somebody else's mortgage.
Right.
Is what you're doing.
Right.
Yeah.
So is it a good time to buy? Absolutely. Do you want to build some wealth? Who doesn't?
Yeah.
And
so what do you see? Do you see any increase in inventory?
We are starting to see inventory levels increase. It's funny, a lot of sellers at this time of year say, I think I want to wait until March or April or May, when it's spring and it's beautiful. And again, I'm of a firm mind that there's never a bad time to sell.
I agree.
But in the spring, we're coming into the spring market. We're seeing a very busy influx right now in both buyers and in homeowners getting ready to list their properties for sale. Spring market starts now. We're in it. This is it. So when we're talking about, is it a good time to sell? Yes, because right now you don't have a lot of competition as a seller.
Exactly.
Which means that the demand for your home is going to be that much higher. Yep. So come April and May, when all these other homeowners put their homes on the market, although the buyer demand is there, the the perception from a buyer is, I've got more variety to choose from.
That slows it down.
And that brings the prices down, right? It's supply and demand.
Yep. Absolutely. And I know so many people say, my house doesn't look pretty in February. I want to see the tulips popping and all of that. And I say, forget the tulips. They'll be up while you're in the transaction. If you do it now, you're going to be one of the few rather than one of the many. And that's absolutely the way to maximize, get the benefit of a higher price and a faster sell time, too.
And I think that there's been a lot of talk about AI recently, too.
Sure.
I think that brings up a great point because AI is an incredible tool in today's day and age. The tulips don't need to pop. We can put tulips on the outside of your home.
Virtual landscaping.
We can make the grass green.
Yeah.
So I think there's a lot that can be done.
Good point.
To overcome some of those.
Yep. Good point.
Fears.
Yep. That may make people hold back.
Yeah. And
the days on market, we talked about that. We talked about inventory. I know we had a meeting this morning, and Chris Tiedites, who's been actually on this podcast once or twice, he was talking about how the Fed kind of slipped us a little bit of a challenge here just because things are coming down. And now it looks like they might be putting the brakes on lowering the rates. But they're going to go down, just not quite as fast as we thought.
Agreed. Yeah, the rates are definitely going to come down. I mean, there's no question. It's definitely a delicate balance with the feds right now. And it's an election year. You know, there's a lot going on in the world that affects these rates. But ultimately, they are coming down. And I think that certainly when you're on the buy side and you're looking at some of these things, it can be a huge impact on somebody's purchasing power, right? A 6% rate versus an 8% rate could be $1,000 a month in your mortgage. But we have this joke, or a lot of mortgage lenders have this joke. It's you date the rate. You know, it's not marriage. You're not marrying the rate.
You can
refinance.
Yeah.
Right? So even if you have a 7% mortgage, when that rate does dip by half a point or a point, you can refi, and now you're, again, increasing your equity, increasing everything that you've worked so hard to accomplish, and decreasing your monthly payment.
Yep, absolutely. And I want to put a shout out to all the ranch owners who are listening to this. Please, please, please. People are crying for one level living. So if you are even thinking in the smallest little thing in your head of selling, this is a fabulous time for anyone who owns a one level home to get on the market and maximize the return on the house you've been living in.
I think that's a great point to bring up too, because I was listening to the news the other morning, and, you know, we've got our baby boomers, right? And although we've not had enough housing, and we won't have enough housing for the general population, a lot of what's going on in the housing inventory crisis, if you will, doesn't have to do with a recession, doesn't have to do with rates. It has to do with the overall population. And so we've got these baby boomers who are all now going to be looking to downsize, and they have nowhere to go because we don't have enough housing for downsizers. And so there will be a huge amount of influx in inventory from those baby boomers because, again, they're not necessarily concerned about the rate. They're selling their home. Most of them own their houses, if not outright, pretty close to at this point.
They become cash buyers.
Correct.
And I've worked with a bunch of them lately. Now, interestingly enough, I had a call from, actually, it was one of the calls I made last week. We had this wonderful thing that Allie got us to do, and every day for 30 days we called past clients and just touched base with people. It was fabulous. And one of the people was a builder that I called was a builder. And he has been kind of working on a property for quite a few years now. But we keep in touch, and he keeps working on it. And his question to me was, Cheryl, what about smaller one-level homes? And, I mean, my eyes lit up, and I said, have you just really hit the gold spot? I said, that is the way to go. And unfortunately, so much of the new construction that we see coming on, and it probably speaks to the fact that the land is so expensive, they have to build a huge house, and because, you know, the materials, the cost of materials, poor builders are just having a really hard time turning a profit because the cost of the materials is so volatile. But we end up with these big, big houses. And so the baby boomers are, I don't want to pay for it. I don't want to take care of the landscaping. I don't want to clean it or organize it if I have somebody else clean it. I just don't want to deal with it. The kids are gone. It's too big. I said, boy, are you on to something here? I said, absolutely. If you did a development of one level, not McMansion homes, boy, I mean, they'd go like hotcakes.
Absolutely. Yeah, no, I think that's a huge point to bring up. I actually worked with a developer a couple years ago, and that's exactly what they built in New Hampshire. And you're exactly right. The cost of land, building supplies, builders and developers at this point, depending on the land, are having a hard time justifying building anything smaller because they can't get the price they need.
Yeah.
And so that brings up another thought, which is single family condos or single family, single level ranches and freestanding condos, because at that point you don't need as much land, but you can get a higher price.
Right.
So there's a huge need for that. There's a huge need for that. And a lot of people, the options are slim. You don't want to go into, you want to downsize, but you may not want to go into an assisted living facility, or you don't want to move to Florida. And so what are the options?
Yep.
There aren't any.
Yep. So we are going to keep our finger on the pulse of all of this. Allie, thank you for joining me today. I think what we're taking away is interest rates are coming down. We do not have an inventory. Ranches are hot, hot, hot. And we do have a ton of buyers ready, willing, and able. And we've got a lot of cash buyers out there, too.
Tons.
Yeah. So, Allie, thank you so much for being here.
Thank you so much for having me.
We have to do this again.
It was fun.
Okay. I told you it'd be fun. All right. This is Cheryl Major, and I am signing off saying thank you for joining me on this edition of Westford Area Real Estate. See you soon.